Aloha and hello everyone. Joshua Hayes at bigwavetrading.com. Happy 4th of July, everyone. I hope you're having a wonderful, wonderful holiday extended weekend. Chart's going to look a little different today because I want to go over the market first, then a lesson on cutting your losses, preserving your capital, so whenever you do have a great signal, you can keep or have more money available to use than if you just ride a stock lower. We're going to use an example from last week's public trade idea, which did trigger and fill. And on my end, it failed. And it actually totally failed. But on an end-of-day basis, it didn't fail yet. So if you're trading on an end-of-day basis, it's still live. But I want to review where your new stop should be if that is the way you're doing it. And then we'll take a quick look at the best way to trade this market right now because it's all about big cap tech. But with that being said, remember how I've been not complaining, but you know how I've been talking about the V-shaped rally on the below average volume and how it isn't right. And eventually we are going to reverse. Well, I will admit this has lasted longer than I thought it would. But that being said, we are now in July. July is historically a very bullish month overall. What we see in July from the 17th to the 27th is one of the most bearish periods for stock market returns. However, from the 1st to the 17th, we have an annualized gain from the S&P 500 going back to 1950 of 25.7%. That ugly period starts then July 17th. So until we get to the 17th, there's no reason to be really concerned. But that being said, we are extremely extended. And I want to talk about the difference between a short-term top and then a long-term top. First off, I'm not calling for a major correction here. August, September, and October are ugly. I'm ready for those months to be bearish. I would love to see us consolidate. But either way, if we pull back, look at where your 200-day simple moving average is. Guys, if we're not even below that on a daily, you'll never find me bearish on stocks. Any pullback, I want to be a buyer. So let's get that perfectly clear. But short term, we are extended. And I have noticed with the market, you can even see it on this chart on the SPY. When the SPY gets outside, its third standard deviation from the Keltner channel, and the RSI is over 70, we see a pullback. We saw it here, and yes, it did lead to higher prices. But if you did a bearish call spread, on this one, maybe you sold the 430s, bought the 435s, you sold the 425s, bought the 430s. That credit spread is going to work out as the stock basically goes nowhere for an extended period of time. Well, not saying once again that we topped, but we can see that happened here on the SPY. We're there again. We're now outside the 3 ATR on the Keltner channel. We have RSI at over 70. You can see how price is moving higher here, but we have negative divergences in the MACD, PPO. But why is it not a full top? Because the accumulation distribution line is strong. So the accumulation distribution line, if I don't see that lagging price, it's going to be very hard for me to get bearish. But here's the other reason why you can't get bearish. Is the S&P 500's advanced decline line. Do you see how it's hitting new highs with SPY confirming the uptrend? That is bullish. If the SPY was hitting new highs, but this ratio was hitting a new low, I would be concerned. If that accumulation distribution line was lagging, I would be concerned. But it's not. So we're just outside the 3 ATR of the Keltner channel. We're oversold on the RSI. I would expect that pullback to happen short term. Now, even though the SPY is extended, it's even more crazy for the QQQ. And you got to trust me on this because I'm not going to go back in time further, but you can do it on your charts too. Just add a Keltner channel, change the settings to a 3 standard deviation right here. I use the 21 EMA personally, but we don't have the exponential moving averages for the Keltners here, so I just use a 20 simple. But either way, it's basically splitting hairs. And they're both over the 3rd ATR of the Keltner channel on the QQQ. RSI is over 70. So maybe you sell the 360 call, you buy the 365s behind it, and you do that bearish call spread on the QQQ here. because we are extended. RSI 70 over the third ATR, the Keltner channel, normally signifies a time for mean reversion or at least a pullback short term. Once again, though, on the QQQ, can't be too bearish. Look at where the 200 simple day moving average is. Check. Look at the accumulation distribution line. Check. And then also, is this advanced decline line lagging or leading? No, it's leading. That's the NASDAQ 100 advanced decline line. It is confirming the QQQ. If this line, if the QQQ was doing what it's doing now, was at the third Keltner channel ATR, had an RSI over 70, and instead of looking like this right now, this advanced decline line looked like this, I would be expecting a significant pullback, if not a very intermediate term top. But we do not have that, so that is the difference between long-term bearish, short-term bearish when you do get extended. RSI over 70, check. Keltner channel over 3 ATR, check. Accumulation distribution lines lagging, no check. Advanced decline lines lagging, no check. Just expecting a short-term pullback. So I just want to make mention of that to everyone. Is indeed extended here on the short term. The accumulation distribution lines and advanced decline lines show no issue. Now, that being said, there is one index, only one though, that has a clear negative divergence overall right now. NASDAQ 100. Why aren't we going over the Russell 2000 Dow Jones Industrial Average, you might be asking me? Because they're really range bound. There's really nothing to ascertain from the price action. I thought the IWM would be breaking out by now, but the mere fact that this bifurcation continues in this market means it's going to be hard for swing traders on an end-of-day basis to make money using consistent, reliable patterns. You need to really be focusing on the NASDAQ 100 stocks right now. Why is that? First off, already told you, IWM, DIA, range-bound, trading range, not much happening there. It's kind of just a mixed bag. Every time it looks like it's going to break out, doesn't. Every time it looks like it break down, it doesn't. Range-bound. But the COMPQ, the NASDAQ composite, you see how this index is hitting its new high? You see how we have a 70 overbought RSI and we're outside the third ATR channel? Now, the accumulation distribution line is agreeing with price, but issue. This is the NASDAQ composite advanced decline line. Is it leading? No. That confirms, obviously, the leadership somehow is concentrated into the S&P 500, especially the NASDAQ 100 right now. So your main focus, even though we are extended, unless this changes, the QQQ is really the only area to make money. On the swing side, intraday, different story, different story. But on the swing side, if there is an area to focus on, it's the QQQ stocks. I can show you how to do that, but before we do that, I want to talk about preserving capital in bifurcated, choppy markets where only select stocks are really running. Now listen, it always pays to focus on the best stocks, the highest quality names. That's what I try to do. However, there are setups and signals that I get in non-quality stocks that sometimes return astronomical gains. I mean, we can just, let's just go over the one that I've been reviewing the last couple of video lessons, I believe. This was the signal. This was the entry. Perfect. Listen, are they all acting like that right now? Absolutely not, man. I'm cutting losses a lot. I'm getting chopped up a lot. But the key is I'm losing very little. And I understand the market we're in, so I'm taking piker size until I get a setup that looks like this. When I get stocks that look like this, I increase size. But am I still going nuts? Did I throw all my capital into this? No, because it's still overall, right now, a crapshoot. And that's because leadership is very thin right now. But I recognize that. But stocks like EVC, even though it's kind of canned some quality, if you go look at MarketSmith or Investors Business Daily, you'll see that the earnings and sales the last 2 quarters were great. But it's still not technically canned some quality. And plus, it's a sub $10 stock. Listen, so if I throw stocks like that out, then I never have a stock like EVC. So that's why I'll do these. But right now, it doesn't pay off. And let's go ahead and talk about cutting losses. So NUS, as you all know, was a new long position last time that we made the video lesson. Whenever I made the new long position, I notified everybody, listen, this could be due simply because of the Russell reconstitution, the signal, but the volume and bop surge with the pocket pivot point signal is good enough with a low enough risk that I'm willing to give it a 1R max loss trade. What is that? I take my good to cancel buy stop at 58.63, which is where I want to get filled. I subtract it from 56.43. I get that total, and I divide it into 1% of my account capital. That way, if this one doesn't work and fails immediately on day one, I've only lost 1% of my account capital. I can come back with that. You saw EVC. I can come back from that quickly. But why I also trade like this is to keep my toes in the water, because even if things aren't working, I cut them. But if I'm keeping my toes in the water and all of a sudden some stocks start working, I increase size a little bit. They keep working, get a great signal, I now know I can load up, especially if I got my time segment volume on the right side. If I got my VIX below 20, I know that I'm lined up if we're in an uptrend. But they don't all work. So what do I do when they don't work? Well, first off, that was the game plan on NUS. Get long here, final 1R max loss stop here. The next day, I get filled. That's why you see this white arrow right here. I added it into my watch list because I got filled. It doesn't go anywhere. One stop, 33% of my shares here. Two stops, 33% of my shares here. Final stop right there. By doing this, if the stock doesn't break out, I will leave this trade with less than a 1R loss. And 1R is all I'm willing to take in a trade like this, on a signal like this. Now, I still thought NUS was going to work, but it didn't. So after this day, I'm stopped out of a third. I don't think it hit that other one, did it? Yes, it did. So after this day right here, that's it. I'm gone. I'm out of 2/3. I only have a third of the original position left. The vast majority of my capital is still intact. Throw a stop here, and my final stop is still there. Shake, 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 Sonora, shake your body now. That might not be the right lyrics. I don't care. Either way, it's a shakeout. But do you see the hammer? This, if this was a great, quote, quote, great signal, which by my metrics was not a great signal. One of the metrics I'll show you that it wasn't great is look at the downtrending 20 SMA, the downtrending 10, and the downtrending 5. I normally like to see the 5 above the 10, above the 20, and all uptrending. So not even close, right? And on top of that, do you see all the red in the chart? Not even close. That's why it was a 1R risk. But the hammer candle is always a re-entry candle. I just don't care about NUS, so I didn't re-enter. That being said, it is working again. How would a re-entry work? 56.84 buy stop. Limit 1% offset for me, and then the final cut loss right here. So far, NUS is working, but I'm not in it, and I'm not going to get back in it. However, also on an end-of-day basis for the website, you still see a white triangle here because it needs to close below 56.44. Did it close below 56.44 here? No. So on an end-of-day basis, it's still quote, quote, live. But that being said, that's how I protect capital. Now, I take all that capital I saved, I got my entire account balance good to go, and I can go to the next one. Why? Well, Josh, you got shaken out. If you just would have held, you would have been fine. Great, great, great. Let's use an example of this stock, CVM. CVM looks pretty good here. Looks really good overall. Let's say you put a buy stop above 24.41. Okay? Bam, you're long CVM. And let's say you're 100% convinced you're going to retest this high. No stops, full stop. Here we go. Interesting. You've now lost almost 70% of your account capital. If you had $100,000, you now have a little bit over $30,000 left. Nah, man, I'd rather cut the losses. So that's why I always cut my losses. And to wrap this video lesson up, how could I have avoided a loss in NUS in the first place? Easy. Don't trade the stocks that aren't in play right now. The only ones are the NASDAQ names. Let's quickly look at those. First off, just coming here, here's a free stock pick for everyone. Planet 13 Holdings. They're actually making money now and actually have sales growth. PLNHF at MarketSmith. Yeah, man. Their sales and earnings, and they're expected to make 163% return on annual EPS in 2022. Look at this consolidation. Look at this tight squeeze, and we're starting to move higher. TSV and PPO over 0. Keep an eye on this one. I'm going to regret not buying this one, but right now I'm not. But wow, this is a flag. That's the top part of the flag. This is the bottom part of the flag. Planet 13 Holdings, very bullish. Now, how would I get long? Well, you put a good to cancel buy stop limit order here. Cut your loss if it moves below there. And that's how I would do it. But that's a different story. That's just random because it just happened to pull up right here on my top weed stocks. Now, for the NASDAQ 100 names, what you're looking at here, I normally go by EMA stacks I like to see. And right here, you're looking at weekly squeezes. So we're getting this down to a longer-term time frame. AVGO, nice consolidation here. We got a tight squeeze. Things are looking good. We even have an EMA stack on the daily. So that's really good. You could always get long here, but I believe you'd have to risk to here. If you risk only to here, that's fine, but the chance of you getting chopped out in a market like this is high. But I like AVGO. It's got a squeeze on all 3 levels. INCY, not so much, even though it is squeezing on all levels in EMA stack. But watch this one. Let's see what happens with INCY. Booking, it's good, but not quite yet. And there's no EMA stack, no big deal. Marriott. Inside joke for everybody in the chat room, huh? Marriott. How funny. How funny this one's up here. I see another bull flag, though, with, I guess we could call this a triangle right here. The initial, this high right here is holding as support, and that's the downtrend of that triangle. And then there's MCPH. That one's consolidating. I like this one. Keep that one on watch. Let's get out of the tightest squeeze and just look at the medium squeezes. Extended, not good. Qualcomm, it's all right. I do like the slingshot forming here. Nah. I like ALGN. Breaks out above this level. Game on. These are all NASDAQ 100 stocks since this is where the market's hot right now. I'm all right with this. Don't love it. Like this base. Don't love it. Piton basing out. Tesla, like this base. Don't love it. They just need more time. NXPI, same thing. Workday. Nah. SGen. See, ATVI, ADI, ADSK. See, I got to get used to trading like this. What you could do is you could buy call options whenever it's in the consolidation in these squeezes and slingshotting. It's just a methodology I'm going to have to add to my repertoire. But this is where the hot area is. It's the NASDAQ 100. These are the stocks you want to go for. And how I would look at them, if you're a member of Big Wave Trading, we can discuss these further, is I would look for them to be in the tightest squeeze on a weekly, medium, then loose squeeze on the weekly, and that's where all these check marks are. All these all the way down in the NASDAQ 100 have at least a loose squeeze. That's crazy. That's a lot. 62. Wow, that's a ton. Tells me how bullish this sector is. But remember how extended the NASDAQ 100 look? How many charts of the stocks that we just went through look like that? None. So we could easily just keep melting up higher. But I hope everybody enjoyed that video lesson. There was a lot to go over. It went way over, the time allotment that I wanted. Remember, guys, I love you guys. I love making these video lessons. I love educating the public. It's a passion of mine. I love trading more. That's what I really am. I'm a trader first. That's why these videos don't have like a thumbnail lead in, and we don't have an intro, and there's no music, and there's no fanciness throughout the video. But if you could do me a huge favor, maybe one day we'll add all that. Doubt it, but maybe. Give me a thumbs up or a thumbs down if you didn't like it. Subscribe, ring that bell, leave me a comment, share. Oh my God, if you guys could share these videos for me, I owe you. I should start doing prizes for everybody. What do you guys think of prizes? Should I start doing prizes? Anyway, either way, happy 4th of July, everyone. We're going to go ahead and wrap it up here. Aloha.